Good morning, ladies and gentlemen. How's everyone doing this morning? Can you guys hear me okay? Oh, it's Wednesday, middle of the week. You guys survived Monday and Tuesday. Great job, everybody. Way to not keel over from all the angst. I love it. Man, I am wound up today. I'm excited. So far, following plan. I love it. Dude, PFI, that's all you got to do, right? Um, Yesterday was a great example of that. Yesterday was an example of how successful you can be through simplicity. We saw it with a lot of you guys in the room, which of course makes me just super happy um, because it kind of validates, guys. It doesn't have to be difficult, and we're gonna stick to that theme today, where it just doesn't have to be difficult. That we're gonna look for advantages, and when the advantages are present, we'll hop on them. Really is that simple. The first advantage I give myself is understanding when news may be released, when something is happening in the market that may make it sporadic or jumpy or change direction, or really just too fast to recognize my patterns. So I go to forexfactory.com/calendar each and every day, and I'm looking. Today is Wednesday, the 27th. 8:30, we had core durable goods. Didn't do a whole lot to move the market. Kind of knocked it out of its rut, but didn't make it crazy, right? If you are a crude oil trader, today at 10:30 we have crude oil inventories, guys. It is a low impact news, but if you're a crude trader, this is when they release the reserves. So there's people waiting to make decisions based on that news, which means that if their decision goes the other direction of your trade, you run the risk of being just run over. So I like to know when the news is. I don't really care what it says. I'm not gonna lie. I'm not a turn on the TV and watch the news and make decisions because of it. And I'm very much not a rear view mirror trader either. I like to be in the moment because in the moment I can recognize advantages. So make sure that you understand when the news is coming. You have to create your own plan on whether or not you'll trade it. But I can tell you my plan says avoid it like the plague. And then everything that I talk about is going to come from the education page. Do we have new people in here today? I'm looking through my names, and I do see a couple new ones here and there. Guys, if you are brand new, first and foremost, welcome to the classroom. It's great to have you in here. This is your classroom. I can't stress that enough. This classroom is designed to give you a foundation to grow from. This class is designed to help you read your indicators. Good morning, Sydney. And this classroom is not designed to be a lecture. It's very much a conversation. So if you were able to find your way in the front door, this class belongs to you. And every time you post a question, every time you post a picture in this room, it's like getting a private session. It really is, because I'm going to address your question. We're going to use examples from the resource material, and the whole goal is that you never sit in the shadows hoping to absorb everything, but rather you put yourself out there and kind of demand. Be selfish with your time, especially if you're on a demo. Get the most out of this 10 days by participating in the class. I am here live 15 hours every week. We look at the live market, we look at your charts, we talk about advantages, but we spend the first hour of every day, really the first hour and a half, talking about one trade. We're going to talk about a high probability trend trade, guys. If you are a brand new user, even more so, if you are an experienced user that isn't realizing the success that you feel you need to be realizing at this point in your journey, pumping the brakes and coming back to this high probability trend trade creates a huge advantage for you because this is a trade when each indicator on every chart agrees with the rules for the trade. Hey, good morning, Alan. Your triggers are going to be the strongest. No termination conditions exist. There's no trouble spots between you and your entry target. This is the absolute best of the best. This is a trade that typically wins 70 to 80% of the time, and this will be the foundation to everybody's plan, I believe, as a brand new user. The high probability trend trade only works off of three rules, but the idea on this first trade, on this highest probability trade, isn't so much to be your entire trading plan. But the high probability trend trade is going to teach you to read your indicators. It's going to teach you to read your charts. And that's really my hope for each and every one of you is that you become a chart reader because through chart reading, you will become a day trader. And chart reading is about 90% of the process. Chart reading is 90% of your day. If you take a 10-hour day in front of the computer, I hope you don't take a 10-hour day. That's just easy math for me. You're going to spend an hour of it trading, and you're going to spend 90 of it just really waiting for the advantages to be present to give yourself a statistical advantage each and every time you enter the market. You will be able to look at your workspaces, and you're going to understand three really key concepts, guys. You're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to stop. Good morning, stay put. Um, we're going to use these continuation points that you're going to be able to recognize as entries for the high probability trend trade. We're going to use the likely to go areas as the targets as you grow with the software, as you begin holding for larger moves. And then finally, we're going to use the likely to stop areas. These are what we call termination conditions. And if you're a note taker, write this on a piece of paper in front of you. These likely to stop areas, these termination conditions can reverse the market. These likely to stop areas can create a fight between buyers and sellers that you never have to be a part of. And these likely to stop areas can really become the anchor for the highest probability trend trade that you can take. Because when we look for this high probability trend trade that happens after a termination condition in the market, after the market reverses from one of these key areas, this is your best chance of success as a new user. It means that you have to be a little patient. You have to wait for that to set up. But guys, I'm going to teach you how to recognize the advantages. We're going to talk about it right now. And we're going to practice, 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 practice. And it's really going to be a lot of fun because you're going to be able to see the growth in yourself each and every day. If you are one of my brand new users, this is probably going to sound like a completely different language on day one. And you're going to think to yourself, oh my gosh, there's a lot coming at me, and that's okay. We're going to break it down and we're going to embrace simplicity, very much so. Good morning, D-Rock. Remember that you don't have to learn everything in a day, but what we can do is we can break it down incrementally so you can learn a little bit each day so that you can piece it all together. Um, Gene, I just saw Gene's post. First trade, okay, then revenge traded, you lost your mind. That's all right, Gene. We all lose them sometimes, and we'll look at it. And what we're going to do, guys, is we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. And then in the second half of the classroom, we're going to come back and we're going to look at these charts that you guys are posting, and we're going to see how the rules apply to the chart that you just posted. Um, we're, I need you guys to simulate your trades. When you got the software, when you got NinjaTrader, guys, it opened up a door for you. There is a simulator. It is real-time paper trading. I want you to practice as much as you can. I want you to break rules all the time because when you break rules, you learn how to follow rules. You understand the consequences. The idea is that you always practice the correct rules and you try to get to the point to where you're always taking the correct rules because when you practice the wrong rules, when you jump in, when you revenge trade, right? When you start breaking rules, what happens is the market's going to give you a couple of them and it's going to teach you that it's okay to break your rules. And then the market is going to do exactly what the market typically does for your next 20 trades and you're going to find yourself in a string of losers. We're going to simplify today. We're going to focus on the high probability trend trade. We're going to focus on this trade that gives you the best chance of success as a brand new user. And confidence comes from the memory of success. That's one of my favorite phrases. Confidence comes from the memory of success. So the more times you find yourself successful, the more apt you are to stick to the course. And then you must learn the Fibonacci and trigger looks so that they're easy. This is repetition, guys. This is the one thing that Nexgen can't provide you, and that's experience. I can't give you repetitions. I can't give you seat time. I can't give you simulator time. That's what you have to do for yourself. And the more that you study, the more that you participate, the more that you post pictures, the more repetitions you get, and the quicker you're going to get to your goals. So when we talk about the step-by-step path to becoming a confident trader, because that's really everybody's goal, right? Is to become confident and to make money in these markets. The most important thing that you can do is post your trades in class, guys. When you downloaded your software, TechSmith Capture posted onto your computer or downloaded onto your computer. TechSmith Capture is probably the easiest tool that you're ever going to use, but just like any new tool, it may take a little repetition. This is what it looks like. It's a giant capture button. If I click it, I can left click in the upper left hand corner of my screen and I can drag to the bottom right. And when I release that mouse, it's going to give me the option, of course on a different screen, to capture an image. When I capture the image, guys, it provides you a preview, and this is how you and I have a conversation throughout the day. Everything that you see on your screen, you're going to talk about. Your rules, you're going to talk about. The way you felt, you're going to talk about. You're going to be able to take pictures even if you're not trading and talk about what you see on your chart. Post it in the room, and what we'll do is we'll have a conversation, making sure that you are becoming a chart reader. There's going to be arrows that you can point out things that maybe you have a question about or something that you're proud of. Shapes will do the same thing for you guys. Shapes and arrows make my world go round. But the most important thing that you're going to do is use this call out button. And if you left click on the screen and drag to the bottom right, this is how you and I have a conversation. This is you telling me what you see, telling me why you did what you did, and then me offering you feedback right there in the moment. Hey, you did a great job on this. Look at the advantages that were present, but let me point out this one little thing. I noticed that your entry is a little bit early. I noticed that your exit is a little soon. Let's talk about the advantages that were in place to make your next go at this market a little more successful and a little more confident. Once you do that, all you have to do is click the copy button. It's going to put it on your clipboard. Come over to the chat room, just like D-Rock did. Drop a picture in there and say, hey, Mark, let's have a conversation. And then the second half of class is designed where I come through and I start looking at all these great pictures. And you and I have a conversation about anything and everything that you've done. The next thing that I need you to do, and guys, I'm going to tell you right now, stay put. Who else was new in here? I saw a couple of you. You're going to fight this a lot. You're going to say, this feels like a lot of work to make $1 million a year, right? Use your spreadsheet each and every day. Nexgen's provided you a trade journal. Every time you take a trade, you're going to post it into this journal. And the idea isn't to give you busy work. Hey, no problem, chef. Sometimes life gets in the way. But at least you got life, right? So I'll be here tomorrow. You can send all your pics tomorrow. Be safe. You can take the picture of what you did. You can talk about why you did it, and you can use these notes to discuss the end result. After you and I have a conversation, you can say, I traded into a termination condition and that cost me some money. Or I didn't have the advantage of momentum and that cost me some money. But if you do a brief historical study each morning about what you did yesterday, set aside 4 or 5 minutes, sip on your coffee, eat a bagel, and look at yesterday's trades and ask yourself the questions. What worked? What didn't work? What felt easy? What felt forced? And you're going to prepare yourself for a better day today. You're going to prepare yourself to be more efficient tomorrow. So don't stray from the spreadsheet, guys. Nexgen, it's in your Nexgen study picks. I'm going to give you mine right now. I'm going to drop mine in the room. New users, steal it. Because the spreadsheet is absolutely amazing, guys. And let me open up mine and show it to you. There are none, Story. There are no calculations for it. But how about this? If you make $100 a day on a 10,000 lot, you'll probably hit $1 million. And I will apologize to the entire room right now. There are people that make $1 million trading futures, right? There are people that are making that money. There are people that get mad if they don't make $1 million a month. We have a trader that uses the software. He's been with us for about 10 years. He trades 100 lots. His daily goal is $50,000, Snorri. His daily goal is $50,000. You guys have all seen Nexgen Ben in the other room making $25,000, $30,000, $40,000 a day, right? It's possible, but these guys don't get there because they bought software. They got there because they developed a plan. It suits their needs. It uses the software. It revolves around advantages. And they studied in Traders Chat. David, on Discord, there's a whole nother room. And I'm going to tell you right now, David, you don't need Traders Chat. Not yet. Traders Chat is where the people that have had the software for a long time go. Traders Chat is going to try and woo you away like the siren song, getting you to break your rules before you understand them. Trust me on this one, guys. I watch it all the time. But I can tell you that people get to where they want to be through the study, through the hard work. Nobody gets there just because they bought software, guys. You have to work for it. So the first page is your tracking sheet. Go back and study it every morning. Your second page. Remember we said that you have to learn the looks so that they become easy. The second page is your looks. What's it going to take to get you into a trade? And then finally, the last page, guys, I have been stealing pictures from y'all for the last 2 years. I've been stealing pictures. Guys, Trader's Chat's amazing. And you're right, I don't hang out there much, Ron. Um, because when I go to Trader's Chat, I feel like I want to break my rules because there's people doing amazing things with the software. But they're doing their things, not my things. My thing is high probability trend trades. Um, but the third page is pictures of the client entries that have been taken over the years, guys. Um, Luciano's perfect short. Luciano's in the room right now. And this is everything that I teach in the first hour. And it's perfect. And Luciano got paid. And if you go through all of these and you look at them, what's a perfect long, right? You guys don't even know who Tony is. He's off doing his own thing. But it revolves around these amazing entries. And that's what we're going to talk about for the first hour, guys. So you have the ability to go through and see what can be done with the software with these people that are trading their plans. Use your spreadsheet all the time. It's going to help you a lot. And then let's keep it simple. We're going to focus on a high probability trend trade first, guys. And this trade only has 3 rules. Please don't create more rules, right? Don't give yourself more to think about. Keep it simple. The 3 rules, each rule provides an advantage. The first rule is your strong triggers. They give you the advantage of momentum. And the second rule is no termination conditions, none of those areas where the market is likely to stop. It gives you the advantage of a clear path, a straight shot to your target. And then finally, your third rule is going to get you into the market where the market is likely to continue, guys. And all it takes to make a trade is 3 advantages. And we're going to keep it simple. And I'm going to tell you right now, there's a million trades to be had, and there's a million ways to use the software to your advantage. I'm giving you the easiest, most consistent right now. These 3 rules are going to happen on 2 charts. 66% of your rules are going to happen on the large chart. Guys, your large chart is a broad stroke of a brush. It's giving you the overall temperature of the market, what the large crowd, the people that move the market, want to have happen. Next-gen users can use one single bar, the most current bar on a large chart, to determine direction, momentum, and areas. And that's what the large chart defines. Your first 2 rules, strong triggers and no termination conditions, when they're met on the large chart, you will have the advantage of momentum as well as a clear path to your target. And these are the first 2 out of 3 rules that happen here. When they're true, once they're met, Next-gen users turn their eyes to the smaller, faster chart. And the smaller, faster chart is nothing more than a refinement chart. That one bar that printed on the large chart, that one bar that gave us direction, momentum, and areas, I've circled it in black, is 15 to 30 bars on your smaller, faster chart. And we are going to refine that broad stroke of a brush, and you will pinpoint where the market is likely to continue. This becomes your area. By doing so, it allows you to reduce your risk. It allows you to increase your profit potential. So I always encourage new users. 3 rules, 2 charts. Let's get great at this. If you focus on the entry for the high probability trend trade, give me a couple weeks where that's all you worry about is just getting into the market at the right spot. What you'll find is that great entries create very manageable trades. So we're going to focus the first hour on recognizing the advantages that the high probability trend trade gives us. And it all begins with trend. Large chart defines trend. This is the first piece of the puzzle as a brand new user. And this is a very serious thing. This isn't me picking on anybody. If you're colorblind, let me know because I'll talk about the looks that create the colors. But it's really pretty simple. If the background is green, you're in an uptrend. The large chart is telling you that the people that move the market want it to go up. You're in an uptrend and you should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, we're in a downtrend and you're only looking for rules to be met for high probability trend trade short. Guys, everything that I teach is sequential. So you need to be able to understand which direction the market is moving in order to ever look for strong triggers. So let's see if the lesson worked. What direction is the trend on my large chart, guys? And I'm asking new people, I'm asking my stay puts, and I'm asking my Sydneys and my Dwights, my Sophia. Are you new, Sophia? Just kidding. My GU21076, guys. Uptrend or downtrend? Play along with me. It's a downtrend, absolutely. Manpreet, I saw you post a picture yesterday. I'm so glad that you have software running. That's outstanding. What direction is the market going? Now you can get to buying. So let's go to another market. Uptrend or downtrend? It really can be this simple, guys. It's an uptrend. One more market. Let's see what happens. Uptrend or downtrend? Was that the same market? No, there's crude oil. Crude oil's in an uptrend, isn't it? So you have already, because you're so darn smart, you've already mastered the lesson on trends. And you know that you're only looking for rules to be met for high probability trend trades in the direction of the trend, guys. And I put the note on there. What if you never fought the trend? How many losers would that pull out of your day? Ask yourself that each and every day. Because you can't have odds favorable momentum. You can't have strong trigger lines if they're not trading with the trend. In an uptrend, strong triggers means that your small triggers, these solid lines, have broken above and away from your large trigger lines, which are these dashed lines. It doesn't matter what creates the line. Doesn't matter the math that goes into it, the indicators used, whether it's a moving average or anything like that, guys. When the small triggers break above the large triggers, this space in between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. I have strong triggers from the point of separation until the point where they return, guys. And this is where Nexgen users are going to look for their trades. These tails on a large chart represent that refinement on the smaller, faster chart, and you will be able to pinpoint right where the bottom of that tail is likely to form with that odds favorable momentum to enter the market, to be in a long position with a market where the odds are favorable that it continues in the direction of the trend. Both triggers are strong and wide. Small triggers below the large triggers in a downtrend. The space created between the two. I want you to picture scissors. If scissors are open, they're capable of cutting, they're capable of doing work. If scissors are closed, you're just taking a stab at things and hoping for the best. The separation lets me know that the odds are favorable for the market to continue down. This is strong trigger lines to find. This is your first rule. This is the best of the best look for entering the market on those retracements to Fibonacci support on a smaller, faster chart, or those retracements to Fibonacci resistance on a smaller, faster chart. If you commit to rule number one, guys, it's going to eliminate an awful lot of problems. So let's look at crude oil. Do I have odds favorable momentum? Are the smalls above the large? Are they both wide and angled in the direction of the trend? Or have they returned? There's none, right, cream white? So we're sitting on our hands and we're waiting for that advantage. How about small triggers below the large triggers, but they're angled up, guys? My trend is down, but my triggers are up. I can't possibly have odds favorable momentum. And then finally, I do have smalls above the large, and the large are beginning to widen. There's my trigger look, guys. And what you need to do as you learn is scroll back. There's that separation. There's that strong push, and it continues. There's that separation, that strong push, and it continues. The separation, and it continues. There's separation again, and the market trends down. Odds favorable momentum is the first thing, guys. It's the first part of the equation. We stick to it because it gives a very decided advantage. When the small triggers return back to the large triggers, when they work their way inside of the large triggers, this is the opposite of strong. This is weak. When you have weak triggers, anything can happen up or down. So in this room, you're going to see two annotations on charts very often. You're going to see OFM, odds favorable momentum, letting you know that rule number one was met. And you're also going to see people annotate ACH, anything can happen triggers. You're reminding yourself verbally that your advantage is gone. And that advantage of momentum is not a constant. You may go from odds favorable to anything can happen, and notice that the market reverses when that weakness is present. After the reversal, there's odds favorable momentum. There's one of those potential entries, one of those tails, and the market continues up. And then we get back to weak triggers, and the market reverses, creating odds favorable, and there's one of those tails. And then we get here. In my opinion, this is one of the absolute greatest things about the Nexgen software is not only does it get you into trades with advantages, give you the opportunity to read your indicators to take advantage of things, but it also keeps you out of indecision. It keeps you out of fights between buyers and sellers. And then this is the sad realization for a lot of us, and this upsets a lot of people because we're all kind of control freaks and egomaniacs, right? We don't control the market, guys. The market is controlled by people with giant accounts behind them. The market is controlled by what I like to call the sharks, right? The big money investors, the institutional traders, the people that trade thousands upon thousands of contracts and really create the volume and the motion in the market. Next-gen users have the opportunity to be remoras. And if you're familiar with the remora, this shark goes and takes on a giant fish, right? And it tears it up, and the shark gets his. He gets his meal, he gets the full belly. Well, the shark can't have all of it, and the remora swoops in and gets a full belly as well from everything that the shark does. So, and Ron's named him Norbert. So when there's indecisions in the trigger lines, when the triggers don't match the trend or one another, these are the sharks in a frenzy. They're fighting, they're jockeying for position. The buyers and sellers are duking it out. One of them is going to win. Next-gen users, if you're relying on rule number one, you never get caught up in this. You simply wait for that odds favorable momentum. This is where a lot of us that have traded the markets for any amount of time, we're like, oh my gosh, I got caught in consolidation again. I got caught in a market that didn't follow through again. The T3 trigger lines will help you identify when the market is not likely to do it, and it keeps you from having to predict. So, guys, this is rule number one. Strong triggers. Is everybody comfortable with the idea? We're simply looking for separation between the small and the large in the direction of the trend. Everybody's good? The overwhelming yeses. Once I have odds favorable momentum, thank you, Dwight. Once I have odds favorable momentum via strong triggers on the large chart, I have to make sure that I'm not trading into one of those termination conditions, one of those areas that may stop the market. In the areas that may stop the market, and guys, this is great for those of you that are brand new, it identifies everything that you're looking at on a chart. The areas that may stop the market, that may reverse the market, the areas where the deep pockets investors are most likely to have a reaction are yellow 1-to-1s, red Fibonacci resistance, blue Fibonacci support, as well as these divergence high and low lines, magenta and cyan divergence lines. When price reaches these areas, buyers and sellers begin to make decisions. Buyers either continue buying or they take profits. Sellers either continue selling or they take profits. Sometimes buyers and sellers enter the market at these key areas, but the reality is that they create a reaction. And when they create a reaction, it removes our advantage of a clear path, guys. So what we're going to do as people that like to trade off of advantages, that's exactly right, D-Rock. And it'll stop printing when it's broken. The same way support will become resistance or resistance will become support. So when the rules are met, to make it invalid, it will stop printing. And you'll see that. Let's do a quick little look in the market. Not a lot of divergences here. So when this divergence line is finally taken out by the trigger lines getting above it, you'll notice that it stops printing. And the same thing with this low. It's still valid because the rules haven't been met for it to be taken out. Do you see it? So this is a line in the sand that we may not reach until later today, if we reach it at all. But we're still going to respect it. Awesome question, man. Thank you for that. So there's a two-part process to identifying termination conditions, guys. And remember, I'm trying to keep everything simple. The first thing that must happen is that price reaches an area. And when I talk about price, what I'm referring to are these dynamic Renko bars. These are nothing more than a reflection of price. They show you exactly where the market is trading. And then when they get outside of their range, they create another bar. That's all it is. There's some math that goes into it that I'm not real clear on. But what I do know is that if these dynamic Renko bars come down and reach Fibonacci support, the only thing that I have to do is ask myself, where are my trigger lines? If my trigger lines have remained above the area of support, well, now the path isn't clear. This is a termination condition. This is an area that may reverse the market. The same thing happened up here. Price reached Fibonacci support, and none of the trigger lines were above. This was a termination condition. This was a giant red flag saying, hey, Mark, let's wait and see what's going to happen. Are the sellers going to stay in control or the buyers going to take over? In this case, the sellers remained in control. This area remains a termination condition until both the small and the large triggers get to the other side of the area. So price reaches an area, no triggers break through, you don't have a clear path. If both the small and the large triggers get to the other side of the area, then the path is clear. Here's a picture that describes it, that shows you visually what it looks like when an area needs to be respected, when you have to sit on your hands, and then the area is broken when both the small and the large get to the other side of the area. Resistance begins to act as support. There's one of those tails with odds favorable momentum. Gene, I'm not sure about potential divergence, but I kind of like it turned off, to be honest with you, because divergence isn't true until it prints, right? And I see a lot of traders making decisions on potential. And guys, we don't trade potential and divergence. There may be a setting to turn it on, Gene. Remember, I'm not the tech guy. But if you know that divergence is a possibility, doesn't it make you start making decisions, maybe exiting too early, right? So I'm a big fan of let that bar print. But of course, if you've been using software for a while, you may have a different thought about it. Let's see if we can find the divergence indicator. T3 divergence potential. Don't want sound alerts. Plot text is false. That's probably it right there. Maybe if that's true, Gene, and I'm not 100% sure, and I apologize for that. I'm not much of a tech guy. You can always go to Jason as well, and he'll help you out with it. I actually enjoy not having the divergence potential on there because it takes, I don't have anything in my rules that talk about divergence or that talk about the potential for divergence, only when it's happened. So it gives me one less thing to think about. But if you need it on, grab Jason. He'll show you the setting real quick. I'm sure that it's still there. It's just not in the new workspaces. So guys, give me a Y in the room if you're with me. Price reaches an area, none of the triggers break, no trades. Termination conditions, sit on your hands, do nothing. Or small and large get to the other side of the area. Now the area is broken and now we have a clear path. This is termination conditions in its most basic form. Price reaches resistance. Absolutely no trigger lines break through. We know not to take the long trade. Price pulls all the way back to support. None of the triggers break through. We know not to take the short trade. Look at the bounce. Price reaches the divergence high line, none of the triggers break through. Guys, I can't go long, I can't go short, I can't go long. My trend is up, my triggers are down. There's absolutely no reason for anybody to get caught predicting the market in this point. We have two sets of rules that aren't met. And you're going to see this happen all day long. You're going to see divergence highs stop the market. You're going to see Fibonacci support create bounces. You're going to see tops coming from resistance, and you're going to see bottoms coming in from support, guys. And if you embrace the idea that you're not in control, that you just don't know, it makes it easier to sit on your hands. Guys, waiting is the hardest. Debbie, you're absolutely right. Doing absolutely nothing when there's nothing to do is the hardest thing that you'll ever do as a trader. But remember that you're not looking for trades, right? You're not looking for entries. You're looking for advantages. And if you don't have the advantage of momentum and you don't have the advantage of a clear path, why on earth are you risking your hard-earned money? So let's look at a few more termination conditions. I'm actually Mark, need JC for life. That's okay. John's my older brother. No, you're okay. So when I talk about breaking through the air, it's okay. We actually sound and act a lot alike. The first recipe is price reaches the area, need JC for life. And if none of your triggers, see how both the small and the large remain below the area? This area will not be considered broken until both lines of the small and both lines of the large get to the other side of the area. And that's where resistance begins to act as support. That's when the path is clear. And you can see down here the smalls break through, right? But the large can't make it. This area still isn't broken. Yeah, so we're going to get both lines. And that's actually, need JC for life, that was the best segue ever. You don't realize you did that, but I appreciate it. Because there is going to be an instance, guys, where areas break. They have to break to create the clear path, right? You're going to recognize this when your small triggers go absolutely smashing through an area with odds favorable momentum. I mean smashing through. Not peeking their head and eking, but boom, small triggers are railing through an area with odds favorable momentum. That means that this area has the potential to break. But since it's just potential, we're going back to that word, the path is not clear. Does that make sense, everybody? If the smalls break through and the large don't, it has the potential to break, but it's not a clear path yet because we require both sets of triggers to get to the other side. This potential to break look is what we call a 50-50 look. Has nothing to do with your potential to win the trade. Has everything to do with 50% of your trigger lines are through the area, 50% are not. And guys, when you have this look, you do not have the advantage of a clear path, which means that you can't take a high probability trend trade. But if this is the only challenge that you have, and you still have momentum, and you still have a beautiful entry area, this will end up being your first medium probability trade. And a medium probability trade means that an issue exists. And I'm going to give you a plan for how to take this medium probability trade with the best chance of success. Because if you look here to the left, even with odds favorable momentum, that area didn't break. It overran a little bit, and it ultimately reverses the market. So I'm going to give you some ideas on how to make sure that you never sacrifice momentum or an entry area on these. So these are the three options as we come into an area. No idea what's going to happen, has the potential to break, the area is broken. Is everybody good with that? And I want you to remember, guys, you kind of have to see this a few days before it starts to click. No triggers through, no trade. If the smalls break through with odds favorable momentum, it has the potential to break, and here it didn't. And then when both the small and the large clear an area, then this area of resistance is broken, and this termination condition is great. It's broken, it's gone until we reach the next one. So what you can do, need CJ for life, is there's a couple things. Is every time I open one of these pictures, I'm trying to make it so you can see all of it, you can right click and copy um, the link to the picture. And this is a great opportunity for you to come to your spreadsheet. And you can put that link into your spreadsheet and you can call it, is it a term? So that's one way to do it. If you're trying to get it more in the moment, one of the things you can do is if I just left click on it and drag it off to the side, it'll let me drop these pictures into a folder onto my desktop. Or finally, let me find one that I can do it on. If it's um, if it's dropped in as a file, the pictures, that's what you're going to do. But if I drop in a file, so for example, if I drop my spreadsheet in so that you guys have those 250 pictures, files will give you a download button, and you can put it right into your download folder, or you can put it into a Nexgen Study Picks folder, or also you can click on it and drag it off to the side. So a couple different ways to do it. Most of what I give you guys in the classroom, oh, hey, cool, Rich. I may forget it once or twice. You might have to remind me, but I'll go for Rich. Welcome to the classroom, by the way. I post a lot of pictures in the room, and for the first hour, it's the same picture, always and always. So everything that you collect today, you probably won't have to collect tomorrow. All right, so let's go back to the user guide. Let's talk about another termination condition. Here, price comes down, the triggers break the area, and you know that the rule is that the triggers have to stay above, right? So we're in this limbo. It might be a little overrun, but guys, this isn't a termination condition. This is a pivot that has a loss of momentum. So here the buyers stole the momentum from the sellers, and the only reason I know that is because this cyan line prints. That's all you need. When you see a cyan line, it means that the sellers lost momentum. That's it. Price came down and momentum didn't follow. This is not a termination condition. And this picture reminds us that the recipe for a termination is after this bounce, price comes back and reaches that divergence low. All you have to do is ask yourself, where are my T3 trigger lines? Where are those momentum indicators? They're all above the cyan line, therefore it's a termination condition. And we call this a pivot stop out. You'll see it in classroom as a PSO. It's a pivot stop out of a prior divergence line condition. When price trades below the divergence line and back above, don't take any more short trades. The market may reverse, it may bounce. Bad things may happen. So guys, when this termination creates a full reversal, meaning that your large triggers go from red to green and you get that odds favorable. Guys, terminations that create a full reversal are what we call strong bottoms. And strong bottoms are the precursor to the highest probability trend trade that you can take. Pivot stop outs happen at highs too. And when they do, and they correspond with Fibonacci resistance, it adds power to the top. But I want you guys to see this picture. This is the picture reminding you that 90% of your day is spent waiting for advantages. In this case, the trend is up, the triggers are up, and price reaches Fibonacci resistance. And when it does, not any of my trigger lines break through. I've reached a termination condition. No more long trades. There may be a reaction. It may break. The reaction would have killed any long trade that I had. And it comes all the way back to Fibonacci support. When it comes back to Fibonacci support, all I have to do is ask myself, where are my trigger lines? Every one of them is above the area. They're so far above the area, I have room for an entire bar to print before they ever come in contact with them. This is what we call the gap theory. If price reaches a mid-band and the large triggers are a full bar away, that mid-band is 100% termination condition. So from the low that we can't go short into, it comes back up to the high. And it reaches Fibonacci resistance. The triggers remain below. That's a termination. It also reaches the divergence high line. All the triggers remain below. There's your second termination. And then it reaches that second level of Fibonacci resistance and all of the trigger lines remain below. Guys, that's 3 terminations in one spot. Something in your brain has to say, holy smokes, that's pretty powerful. And then when this termination creates the full reversal, Where's my arrow? And my full reversal gives me separation between the small and the large. There's one of those tails. There's one of those potential entries for the highest probability trend trade that you can take. That trade that typically wins 70 to 80% of the time. Guys, this is your core trade that we're going to focus on the entries for it. That's your best of the best. And then you'll see it from lows as well. Price reaches these yellow 1-to-1s, and it reaches it with odds favorable momentum. That market is screaming to the bottom. Hey, good morning, Ace J. But when price reaches 1-to-1s, all you have to do is ask yourself, where are my trigger lines, guys? And if they haven't smashed through the area, whoa. If they have not smashed through the area, sit on your hands and wait for the reaction. You've reached a termination condition. I take a lot of pictures, and I want you to see why termination conditions are so important. At this key area in the market that you knew about for an hour and a half before, the sellers hit it, but the buyers were waiting for them. And look at the push. If you went short, you lost, right? And then the sellers said, but buyers, we're not done. And they try to push down. And then the buyers push up, and the sellers push down. And the buyers push up, and the sellers push down. And then it's not until right here that the buyers win the fight. And when the buyers win the fight, David, and both small and large triggers are above resistance, so the path is clear, and the smalls are outside of the large. Do you see the tail? That's your entry for the highest probability trend trade. And I'm going to tell you guys right now, it will be, let me just cover this up. Your ability to do nothing when there is nothing to do is what will bring you success as a trader. Guys, it's not going to be the one trade that you take that makes five. Absolutely. So the tail, remember, David, that this is a large chart. This tail on the large chart, hold on, let's go to the refinement picture real quick. We don't trade the tails. What we trade, and we're going to get into it when we look at the entries, this tail on the large chart that we see after the fact is that refinement, that pullback to an area on the small chart. So rule number 3 pinpoints exactly where the bottom of that tail is most likely to form, and that becomes your entry for the highest probability trend trade. So we're not taking the tail, we're using that smaller, faster refinement chart to identify where the tail is most likely to happen. But we're only doing that after we have, hey, Ace J, go ahead and edit it, man. You don't have to post it if you're going to edit it. So this is just the large chart, right? Just the large chart. There's nothing to see. There's no entry to see on this chart, right, David? It's just a big chart. The only thing that we need to see on this chart right now, in the moment, is that all of my triggers are above resistance, is that my small triggers are not weak inside, and that's it. And once I see that, when this bar is right here, that's when we're going to go get our entry rules. That's when we're going to refine this broad stroke of a brush. David, you have to remember that this is after the fact. So in a live market, it's going to look like that. You can't even see the tail yet. Does that make sense? I don't know if there's going to be a tail or not. I don't know if there's going to be a pullback or not, but what I do know is that my triggers are clear of resistance, and I know that my small triggers are outside of my large, so I know that my first two advantages are in place. Ace J, I can't tell you to wait or to not wait. I can't tell you to enter or not enter. Crazy illegal. How about if we say, are your rules met? And if you write your rules on the chart, you'll know whether or not they're met. And if you don't have rules to enter, well, then you should probably be paying attention to this first hour, because I'll give you a pretty good idea what to do. Does that make sense, David? The large chart's only the first two pieces of the puzzle. The small chart's what gets us our entry. The small chart is what we refine. It will. I promise, because I have never given up on anyone in my life. You will not be the first, my friend. So, guys, termination conditions. I'm going to do this real quick. I'm going to give you my picture for termination conditions. There's a couple of them. And I want to share this with you. Termination conditions at a low. And I do this because it reminds you the recipe. Price has to reach the area, and the only thing you have to do is ask yourself where the triggers are. 1-to-1s, triggers above, don't go short. Fibonacci support, triggers above, don't go short. Reaches the divergence low, triggers above, don't go short. It really can be that simple. Wait, because there's only three things that are going to happen. It's either going to break, it's either going to reverse, or it's going to bounce a whole lot. I do cream white. If it's on my charts, I respect it. So, guys, there's fibs update every 2 hours. And sometimes a fib will update right in the middle of your trade. It's a pain in the butt, but absolutely respect it. And then when you look at these same from the highs, guys, the recipe doesn't change. Price reaches the divergence high, no triggers break, no long trades. Price reaches Fibonacci resistance, no triggers break, no long trades. Price reaches 1-to-1s and resistance. Triggers are below, no long trades. Let it be simple like that. Because it's going to take a lot of the burden off of you. So we have strong triggers, right? We've got those terminations at lines. There's one more termination condition that I want to talk about, guys, and it's going to help you identify change on that large chart, but you're going to need to use the smaller chart to do it. This is the only, capital letters, this is the only termination condition that I will respect on a smaller, faster chart, on an entry chart. And that's going to be three divergences in the same in the location, same price range. Divergence is nothing more than a loss of momentum. Let's do the visual because I do have new people in the room. We're going to use two different color arrows to show this off, guys. The magenta arrow is just price. Price comes down and it forms a pivot. That's it. When price forms a pivot, let's do them all, right? Price comes down, forms a pivot. Price comes down, forms a pivot. Visually, we see this on our charts. What we don't see is what's written in the background, and that's the momentum. So when this pivot forms, and right about here on the third bar, if the momentum is not following price, you get a cyan line. So when you see that cyan line, you know that momentum isn't following price. Does that make sense to everybody? All it is a loss of momentum. When you lose momentum 3 times in the same price range, it may terminate the trend. Whether it's a low or whether it's a high, 3 losses of momentum in the same price range can terminate the trend. This termination condition becomes more powerful when your small triggers work their way inside of the large triggers. You get those anything can happen triggers. So now visually, I see the loss of momentum, and I also see visually those anything can happen triggers. It's adding a little bit of power to that small, or to that low. And then when the third divergence is higher than the previous or lower than the previous from a high, you have a head and shoulders pattern, and it makes it even more powerful still. So 3 divergences is a termination condition. 3 divergences with weak triggers is even stronger. 3 divergences with that head and shoulders is even stronger still. You're going to see this look from a low or this look from a high at times when your large chart can't move fast enough to show you that things may be changing. Maybe you have a clear path and weak triggers, and then suddenly it goes up. 3 divergences on a smaller chart will help you recognize it. Maybe you have odds favorable momentum and a clear path, but if 3 divergences print, you know not to take that last long. And guys, there's your first 2 advantages. The advantage of momentum, dictated by strong triggers on the large chart. The advantage of a clear path, dictated once again by the triggers versus the areas on your large chart. Large chart defines direction. Large chart defines momentum. Large chart defines trend. And when the large chart has odds favorable momentum, when the large chart has a clear path, you're going to turn your attention to the smaller, faster chart. It's time to refine. And then, David, that tail that you didn't see, I'm going to show you how to identify where it's most likely to happen. When everything's up on the large chart, your small chart looks like this, guys. You should have odds favorable momentum, right? The background's going to be green because it can't be green if you don't have odds favorable momentum. You're going to turn your attention to two things. The first thing you're going to look for is favorable large triggers. And favorable large triggers mean that both your large, the smooth dashed triggers, and your synthetic, the ones that look like they have steps on them, they should be overlapping one on top of the other. These two trigger lines should be like two snakes riding piggyback. Because when they're one on top of the other, tight and concise, it provides the smallest window of opportunity. And that's what we're defining right now. The window of opportunity is where the market is most likely to continue. So when I have these favorable large triggers, I need to look for the areas that are falling within. All high probability trend trades come from areas, guys. If it doesn't come from an area, it's not a high probability trend trade. The areas that we will trade from are going to be Fibonacci support or resistance, mid bands, or yellow 1-to-1s. These areas inside of favorable large triggers act as a bounce point. It's like a brick wall that you're throwing a tennis ball against. This is where the market is most likely to continue, at the areas inside of favorable large triggers. So when the large chart says look for an entry, we're identifying the triggers in the areas, but we need a pullback. Rule number 3 says that we are going to buy or sell a pullback, which means a small retracement in price counter to the underlying trend. Let's look at the big chart, little chart. Large crowd says we're going up. Large crowd says we have momentum. Large crowd says we have a clear path. Small crowd wants to fight it. Small crowd hates money. So the small crowd forces a pullback, a small retracement in price, counter to the underlying trend. You're going to take advantage of that pullback that starts with a reversal bar. And at the time of the reversal bar, you're going to create your window of opportunity. And for a long trade, it's going to go from the highest point of support to the lowest point of support inside of favorable large triggers. And I want you to get in the habit of writing that on your charts every time you take a trade, inside of favorable large triggers. These areas inside of the triggers are where the market is most likely to bounce. You're going to right click on your chart. You're going to create a limit order. And it's going to go right at the top, at the highest point closest to price in that window, because remember that your large chart has odds favorable momentum and absolutely nothing to bounce off of. We don't expect these guys to be able to get much done, so much so that we're going to have an order waiting for them right at that highest point of support inside of favorable large triggers. At this point in your trade, you have done everything that you're in control of. You have your rules met. That's all that you'll ever control in the market, guys, is whether or not your rules are met. Your large chart had odds favorable momentum. Your large chart had a clear path. You're going to wait for the reversal bar on a smaller, faster chart, and at which time you're going to create a window of opportunity. We only enter on the 5-1. But there is no we. It's you, David. Your 5-1 chart is your entry chart. Do you see how we're taking that big look on the large chart and we're cranking it down into this small little manageable entry area? There's an awesome correlation between the two. The large chart says let's take a trade. The small chart says let's reduce risk by waiting for the pullback to the area inside of favorable large triggers. So I'm going to identify from the top of my triggers. No worries. So David, this is awesome because what we did here is we just eliminated one of your challenges. Large chart leads the way. Large chart says up. Large chart says clear path. And then we're going to look at a small chart. This reversal bar says, let's create a window. Guys, my first box is favorable large triggers. This isn't the window. This is where I'm looking for the areas. My window extends from the highest point of support to the lowest point of support inside of those favorable large triggers. This is where the market is likely to continue. This is where I anticipate the bounce. My limit order goes right at the top of the window because of the momentum, because of the clear path. I want to make sure that I'm in at the highest point. Is everybody with me? Can I get a Y in the room if you're with me? Reversal bar prints. I'm looking at the favorable large triggers and finding the areas inside. And you know what, CJ, I don't have a rule that says that it absolutely has to be, but if you're trading the absolute best of the best look, the odds of it not being are pretty darn slim. Because what causes the color change, and let's talk about that. What causes the color change on any chart, I'm going to show a picture of it real quick. When the small triggers break above the large triggers, that's what paints my background green. So the only way that I can ever have odds favorable momentum is in a green background to the upside. And when they cross below the large triggers, smalls below the large, that's what paints it red. So if we're looking for, Rich, odds favorable momentum on the smaller, faster chart, it would be impossible to have a red background once again. Does that make sense? Charts should agree. Reversal bar prints, and I'm going to go ahead and tell you guys right now, as a brand new user, as you try to decipher all this, you're probably going to miss a few, right? You're going to have moments of indecision. But through repetition and practice, you're going to begin to nail these entries. And your first 20 days is just finding the entries. And now let's talk about some realities of trading. We're in at the top because of the momentum, because of the clear path. I want you to mentally prepare yourself that that trade may go to the bottom of the window. It may go to the lowest point of support and bounce, right? Because it is a window. We're good. I'm not going to lie. We are really stinking good, but we still create windows. We create an area where the market is most likely to continue. Every trade that you enter on your 5-1 chart will typically have about 12 to 14 ticks of risk. We manage our risk before we ever manage our profits, guys. And we do that by having a protective stop outside of the window of opportunity, 4 or 5 ticks beyond that window, which is why it's so important to have those favorable large triggers because it reduces the size of the window. So if for some reason the market extends beyond the window, Nexgen users are sitting there with a protective stop. And they exit the trade. They say, this is no longer giving me the advantages I need. I no longer have a statistical advantage. Therefore, I choose to exit the trade rather than sit and hope. And I'm going to remind you guys that when you follow the rules for the highest probability trend trade, this is a trade that typically wins 70 to 80% of the time. And those of you that are good at math understand completely that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. So guys, do me a favor, give me a Y in the room if you're comfortable with the idea that you won't take 100% winners. If you're comfortable with the idea that you may have to watch a trade go against you a little bit before it does what it's supposed to. And that if you're comfortable with the idea that it's okay to cut your losses and wait for the next opportunity. That 20 to 30%, guys, this is a cost of doing business. And I try to be real honest about this in the beginning because when you lose a trade, most of you are going to have negative feelings about the trade. But if you lose a trade that had the advantage of momentum, that had the advantage of a clear path, and that had the advantage of an entry area inside of favorable large triggers, you've given yourself the opportunity to take trades that typically win 70 to 80% of the time. And if you get in the habit of writing your rules on these losers, analyzing them from an advantage standpoint, it makes it almost to the point to where you simply don't mind giving back a little bit, right? It's like donating. It's your 10%, whatever you want to call it. But this is the trade that I'm never going to miss, guys. This is a trade that I'm going to focus 20 days on as a brand new user so that I always get in at the right area, so that I'm always giving myself these advantages. And once the trade begins to move in the direction, you can reduce your risk from outside of the window of opportunity to below that reversal bar, further managing your risk, creating smaller losses if it decides to turn against you. And then 70 to 80% of the time, guys, we're catching those profit targets. This is your high probability trend trade, guys. This is your focus for 30 days, right? 20 trading days, however you want to say it, whatever makes your brain feel better about it. Getting in at the correct area, because you wait for the pullback, your risk is reduced. Because you wait for the pullback, your profit potential grows. And I want you to focus on it because the advantages are there, guys. And one of the things that I'm going to give you, this is where I give you all of your gifts. Got to go load a truck. Man, better you than me, Gene. Have a great day, bud. Let me make this a little bigger so it's easy on the eyes. I'm going to give you guys a high probability trend trade checklist right now, guys. This is a checklist that identifies the advantages and holds you accountable to making sure that they're true. You can print this checklist out and put it on your desktop, right? Grab your biggest, brightest crayon, and every time you're looking to get into a trade, make sure that the rules are met, because I've never had anybody in the history of this plan, this simple high probability trend trade, do worse than 70%. And I've had people put it through the ringer. I've had people go back and back test it over like 400 days. And his results were about 84%. A gentleman named Grant that used to trade in these rooms. He's off doing his own thing now with the software. But this high probability trend trade keeps you focused on the absolute best of the best. And then I'm going to give you another copy, which is the same checklist, but I've stolen materials, right? So what's a good top or bottom? The first thing that we're going to check off on. It's a termination that creates the full reversal. Here's your identifying. Large triggers, small triggers. That's odds favorable momentum. Here's your recipe for termination conditions. And then here's identifying that area for entry on the smaller, faster chart. Identifying the window of opportunity. So guys, each and every morning, you should be studying this. Take a look at it. Remind yourself what it is that you're looking for. And the idea is that for 20 days, 20 trading days, you're giving yourself the ability to recognize great entries. You're giving yourself confidence through the memory of success. You're creating the ability to read charts, to put yourself in a position where you understand where the market is likely to continue, where it's likely to go, where it's likely to stop. And this simple focus, guys, removes the burden of multiple charts, of too many rules. And I call it a burden because it very much is, guys. The more you have to think about, the less likely you are to think about the right things. And now I'm going to give you a plan. So I told somebody in here, I won't tell you when to enter. I won't tell you when to exit. That's not my job. My job is to teach you to read your indicators. You have to formulate a plan. But I understand fully that you're not in a position to do that yet. So here is a plan that you may adopt as your own. But this is only a stepping stone in your learning journey. It's designed to optimize your chances of success with a high probability trend trade or the 50-50 trades as a new user. Optimize your chances of success. A gentleman in this classroom posted yesterday that he's adhering to this plan 100% and he's at 79% winners. Your results may vary, but that's a damn good win rate. Through simulation, study, class feedback, and continuous practice, through doing your part in the study process, you'll be empowered to craft a plan that's tailored to your personal goals based on your experience reading the indicators. Guys, this disclaimer reminds you that you're not obligated to stick to this plan forever. I don't know why you wouldn't, but you're not obligated to. Go off, find more trades, right? But make sure that you're writing rules for them. Make sure that you're creating a plan for each and everything that you do. And if you don't feel like doing that work, steal this plan. It's a simple plan for consistency. And notice that it starts with bold print. Never fight the large chart direction or triggers, ever. Because when you fight momentum, when you fight direction, guys, that's about 70% of the losers that new users show me. All you're going to do is define your entry. 20 days, right? This is a 10-day demo. But you're going to spend 20 days looking for entries. Why do I say that? Because your first 10 days on demo, Rich, stay put, your first 10 days on demo is understanding that you're going to have every tool that you need to be successful, that the software does in fact work. You're going to watch people with success every day in this classroom, and we're going to talk about it each and every day. And then you're going to commit. And once you commit, guys, that's when you start really doing the work, because now the software is yours. Now you have the greatest elliptical in the world. It's just time to get your butt on there and start running reps. So define your entries, 20 days. Take 1,000,000 pictures, post every one of them in class. And then once you get those great entries, I say it every day that great entries create manageable trades. Guys, getting in at the perfect spot creates a manageable trade. This plan gives you a management plan so that you can remove emotion. The same way that you are methodical and pragmatic getting into the market, you're going to incorporate that into your management plan as a brand new user while you learn to read your charts, right? Nana's on babysitting duty. Debbie, have an awesome afternoon. Kiss those babies for me. Management is the second bite, guys. Management is what's going to get you paid off of that great entry. So every great entry starts, woo, every great trade starts with the perfect entry at resistance inside of favorable large triggers. When you enter at that area, your initial stop goes outside of the window of opportunity, 4 or 5 ticks. And at this point, there's absolutely nothing for you to do. You're either going to get stopped out, you're going to take that loss, but because you followed your rules, you're going to be like, it's a cost of doing business. Small losses are a normal part of a positive equity curve. Or the market's going to say, you had so many advantages, let me give you a reversal bar in the direction of your trade. And if it gives you the reversal bar, you're going to reduce your risk above that reversal bar 2 ticks. And once again, you find yourself in a situation where there's absolutely nothing for you to do. You're either going to get stopped out for an even smaller loss, which hurts even less, right? Or it's going to go to your first target. And in this super simple management plan, your first target is $100. That's it. First target's hit at $100, at which point that $100 goes into your account, simulated or otherwise. That $100 creates elation, the serotonin's flowing, the dopamine is there. You heard NinjaTrader tell you profit target reached, and now you're developing confidence through the memory of success. All over $100. And I'm telling you, it will have this reaction. That's why it's so darn close. Because when the rules are met, guys were talking about in the room yesterday, when the rules are met, it almost never misses that first $100. But you're also going to move your stop to break even. So not only are you going to get paid, you're going to risk absolutely nothing, which makes it easier for you to hold for the second target. It makes it easier for you to trust the idea that the large chart had the momentum, that the large chart had the clear path, and the large chart is the reason that you took this entry in the first place. It makes it easier for you, having been paid with nothing to lose, to hold for the second target. And if you hit the second target, congratulations, it's a $300 trade. $300 in your pocket, and nobody cares what happens next, right? That's it. You're out. The trade is over. The emotions are gone. $300. And to a lot of people, $300 is whatever. $300. I can't make a career off $300. But $300 is a $1,500 week. Suddenly it sounds a little better, right? And a $1,500 week is a $6,000 month. Well, hold it. There may be something to this highest probability trend trade, being super conservative, grabbing the best of the best, getting paid and getting the hell out. Because a $6,000 month, guys, is a $72,000 year. And I don't know if you know anything about the United States. There's not a ton of people that make $72,000 a year. That's considered up there for a lot of folks. And then what happens when you're so good at this that your 2 lot becomes a 4 lot? And you incorporate the exact same management plan. Suddenly, that exact one high probability trade chock full of advantages has you up to 144, right? And we're just going to keep adding contracts rather than looking for more trades. And eventually, you're going to get to that point. So, Snorri, there's the beginning of the math. Uh-oh. Thanks, Ron. There's the beginning of the math to get you to 1,000,000. I'm going to do a quick reboot, guys. Just reconnected. Is that better? I hope. Just reconnected my microphone. Yep, cool. Awesome. Um, this is your first 20 days. Focusing on the best of the best. So, guys, here's your simple trading plan. I'm going to put it in the room. That's my gift to you. Whether or not you stick to it is totally up to you. I have no opinion on that, right? If you want to develop your own plan, and you'll see that people here are arg. No, actually, it turns out, guys, that I was muted. How's that? Is that better? Can you guys hear me now? Yeah, it muted me. That's kind of funny. Guys, if you want to build your own plan, I also created this page for you to create a plan outside of the simple plan. And this is what Ron C did. Ron took his chart trading and decided to add a new trade, right? He still defined his entry and he created a checklist for what it's going to take to get him in. And then he took pictures, guys, and this is how plans are built. As a brand new user, you're not going to have the repetitions to build a plan, but ultimately you will develop a plan that suits your needs through your simulation, study, class feedback, and simulated practice. And that's how you become a day trader. So let's read the S&P real quick. What direction are we going? Stay put. Rich, what direction is the trend? It's down, right? Do I have odds favorable momentum? Are the smalls below the large or the large wide and angled in the direction of the trend? Absolutely. Guess what? We're done here. We go to a smaller, faster chart. From the bottom of the triggers, from the bottom of the triggers to the top of the triggers. Do you see it? But watch this. Let's refine it even more. From the lowest point of resistance to the highest point of resistance. Guys, this little green box represents where the market is most likely to continue. Your job is to right-click and activate a limit order a tick or two below that lowest point of resistance. Give me a Y in the room. David, did you see how I got rid of the large chart once the rules were met? And I came back to my small chart looking for an entry. Does that make sense? I know that's where we were going here. And if I put them together, whoops, where's the other one? This chart says go. This chart tells me where to go from. Yeah, Snorri, that's tough, isn't it? Because you know what it's most likely to do because of the momentum, because of the path. So guys, this is your first 20 days, learning how to put that limit order in the right spot. That's all it is. And then take a picture. Watch this, David. Let's go through the whole thing on the picture. Let me cancel out my order. So David, when we're doing this, this is what I'm going to do. I'm going to annotate this chart. Trend is down. Only looking to sell. That's the first piece. Everybody's comfortable with that, right? The trend is down. We're only looking to sell. So the next thing, and I'm going to draw the arrow because I want the visual to go with it. Rule 1 says odds favorable momentum. And I'm going to put a capital Y. Absolutely, I have odds favorable momentum. Rule number 2 says no termination conditions. And guys, do you remember the recipe? Stay put, Rich, Lex. What's the recipe? Price reaches an area, right? That has to happen. So I'm going to put clear path. Yes. No terms present. Are you with me so far, David? Large chart leads the way. And now, when I write rule number 3 on here, let me know if that helps you know how I picked it. Rule 3 says, I will sell a pullback at an area, fibs, midband, 1-to-1s, inside, let's do all caps on inside, inside favorable large triggers. So David, this is rule number 3. Everybody, this is rule number 3 verbalized. I will sell a pullback at an area inside a favorable large triggers. So what do I have to do? Where are my triggers? There's the bottom of the triggers to the top of my triggers. I'm looking for areas inside of it. So David, my window of opportunity is from really, that's it. Those are the only areas that fall inside. That's how I know where to put my order. The areas inside of favorable large triggers. And guys, this is why I encourage you to write your rules on the chart every time. Don't tell me you took a short. Don't tell me you took a long. Tell me why you took it. Reinforce your rules and have the confidence to put that order right there, right below the lowest point of resistance inside of favorable large triggers. This is a trade that typically wins 70 to 80% of the time. I don't, I don't have an ATM strategy. So I'm going to sell another one. My initial stop goes outside of the window of opportunity where the market should not go. My first target is $100 in the distance. My second target is $200 in the distance. That is everything that I look for in a trade, guys. And what I know, without question, is that this is a trade that typically wins 70 to 80% of the time. This is a trade that's so chock full of advantages that I'm not going to miss it. Because I can identify where the market is likely to continue, my stop is above it, guys. I'm less than 8 ticks. That's acceptable losses to me if it doesn't win. We're at the top of the window. If it goes beyond here, I don't want it anyway. But it can turn. It got me. Whoops, I have to close out the other one. The only thing that I want you guys looking for, the only thing that I want you guys looking for is perfect entries. Show me getting in at the best of the best spot. But remember that you're not in control, right? David, the triggers tell you where to look. The areas inside of the triggers tell you where it's likely to bounce. Does that make sense? The triggers tell you where to look for areas, but it's the areas where we anticipate a bounce. They ran us all over, Pineski. Let me get this stuff off the chart. So new users, what you just saw there was one of the 20 to 30%, one of the cost of doing businesses. And it is going to happen. And I'm so hesitant doing this in class because so many people say, well, I watched him take one loser in class. And because he took that one loser, the software probably doesn't work. But let's go back. Today's been an interesting day, it looks like. This is yesterday. This was around noon yesterday. I'm going to scroll back. This is how you can study, guys. The exact same rules go in the other direction. I should have just made that bigger. It would have been easier. Odds favorable momentum. No termination conditions. There's your pullback to support right inside of favorable large triggers. So David, that was my ATM strategy. That was me setting in predetermined stops and targets. And that's what we do every time, guys. We don't fly blind. We're putting in stops and targets. So David, on yours, if you're looking at 8, absolutely. If you go to your ATM strategy and chart trader, John's got you about 15 different examples. Why would you cancel, Dwight? Why on earth would you cancel that trade? You had odds favorable momentum. You had no termination conditions. Is two divergences a termination on a small chart? The answer is absolutely not. It isn't. Three divergences, Dwight, all day long. It's a termination condition. So what you actually did is you just broke your rules. You formed an opinion. These are the ones that you have to be willing to lose every now and then. Strong triggers. Two divergences isn't a term. Odds favorable. Clear path. Dwight, this is as good as it gets, especially coming from a termination that creates a full reversal. This is the highest probability trend trade, guys. That's the one that wins 70 to 80% of the time. You just got to witness the 20 to 30. What is this? This is crude oil. Inventories are coming out in 5 minutes. So the idea is that you're going to study. You're going to go through, annotate your charts. For those of you that are brand new, show me both charts every time you post a picture. That helps me give you the best feedback. Write your rules with arrows to them, the same way we showed that picture that we did together. It solidifies the looks in the area and the arrows. It really increases consistency. Show your timestamps. Show me where you're looking, right? So I can line it up. And guys, make sure that you're showing me your entries and exits, whether you're doing it with arrows and boxes, or if you're just going to right click and show me those entries through printing text and markers, plotting executions. This is how you annotate a chart for the best feedback, guys. And the whole idea is that you need feedback. You need to know what you did right or wrong. So to minimize your learning curve, this is how we're going to end the first hour. To minimize your learning curve, post pictures in class, every trade. Win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but long-term failure. How are you going to know the difference? You need feedback. That's what we're doing here, guys. We're here to help. If you're on the simulator, if you're participating in class, there's no risk or loss of capital. You need someone to tell you what you did right or wrong. 15 hours every week. My sole purpose in life is to teach you to read the indicators and to help walk you through this process of becoming confident. And this really is the educational magic, guys. This is what sets us apart, in my opinion. I do believe it's the best software in the world. But I also believe that if you don't learn how to use it, it's no different than having a race car in your garage that never gets anything done. Guys, look at this. Odds favorable, clear path, perfect entry. Three divergences ruins the party. These patterns repeat themselves all day, every day, guys. Price reaches a divergence high, none of the trigger lines break. No reason to take the long. All we're doing is we're reading indicators. So that's the first hour. Welcome to it. Stay put. Who else is brand new in here? Rich. There's a few of you in here. I'm going to show you my favorite picture. Guys, this is day one. Right there. That's day one. Drinking from a fire hose, guys. There's a lot coming at you in day one. There really is. But it gets easier. Take off, eh? It gets easier every day through repetition. It gets easier every day through doing the same thing over and over and over. And then Chris L, let me help you real quick. When I go to NinjaTrader 8, This is your temp folder. Double click. Get rid of everything inside of there. Cool. And then also go to your workspaces. Get rid of your recovery folder. And then Lex, reading the charts as you explained, really builds confidence to stay in a winning trade. It does. It really does. And repetition does too, Lex. I say it every day. And I'm going to tell you right now, guys. Lex, have you talked to who's your salesperson? The answer is yes. I'm sure that we'll find a way. Um, Mark Dean, cool. So let's talk to Mark and let's see what options are out there. Because if you're ready, I want him to work with you with it. So I just sent him a message to reach out to you. And let's see what we can do to make it happen, brother. Especially with the momentum going, right? Especially with everything moving the right direction. The software is amazing. I firmly believe that. And the cool thing is, guys, is remember the days where you had to blow out 10 grand to learn how to trade? You don't anymore. There's stuff like Apex. And there's still 80% off for another 13 hours. There's stuff like Apex where you can test that plan, where you can control $50,000 right now for like 35 bucks a month. And if you trade confidently and consistently and you don't blow out accounts, you can trade their money. You can keep 90% of it, right? So there's options out there to where you don't have to have 20 grand. Um, Lex, you could. I would go ahead and get the software so that because you're paying for 30 days, you might as well have 30 days worth of software, right? But guys, you don't need Apex to know whether or not you're consistent. That's what your spreadsheet's going to tell you. Your spreadsheet's going to tell you whether or not you're consistent. Your spreadsheet's going to tell you whether or not you can follow rules. So the idea, let me share this picture. The idea is that when you have simulated, Lex, everybody in the room, when you've simulated and when you're taking the correct trades, that's when you go and you say, all right, on simulator, I don't panic. On simulator, I hold for the target. On simulator, I'm not breaking my rules. Now I'm going to go and I'm going to see if I can do it when there's a little bit of pressure or live money on there, right? So get consistent first because what does it mean to your brain if you blow out an account? It feels like failure, right? And traders are destined to beat themselves up for things they shouldn't. So get consistent. Give yourself 30 days. And then go to that apex, right? And then go, all right, I've been following rules and I've been doing great. So, David, have an awesome one. Did you have a little aha moment today, I hope? One step closer, right? Each and every day? I hope so. I hope so. One, two, three, four divergences in the same price range, guys. It told you don't try that long. Don't try that pullback to support inside of favorable large triggers, not with all these divergences printing. Did anybody forget that rule on the small chart and take it anyway? I hope not. But if you did, post that picture, annotate that chart. What an amazing lesson. All right, guys, I'm going to take 5 minutes. I'm going to go refill my water, stretch my legs. And then when I come back, we're going to start looking at all the great pictures that you guys have posted. We're going to scroll through the markets and see if we have any rules met anywhere to take a high probability trend trade. If we do, outstanding. If we don't, it's okay. Take a picture. If you're brand new, stay put. Take a picture and tell me what you see, right? Let me see where your brain's at. Chris L., tell me what you see. Yeah, D-Rock, no problem. Post them again in the room tomorrow. Or if you need feedback, email them to me. And if I have a minute, either this evening or after class, I'll try, if there's not too many of them, to get back to you, or just bring them to the room tomorrow. Either one works. Guys, I'm going to take 5 minutes when I come back. We're going to go over everything that you've posted. We're going to talk about advantages, and we're going to look for opportunities in the live market. I'll be back in about 5, guys. Let's get going. And Ace J, let's talk about your question first that you just posted in the room. How do you use a stop loss if you're not using an ATM strategy? So let me ask you, why aren't you using an ATM strategy? Did you just forget to have it in place? Or would you rather just fly by the seat of your pants and hope for the best? Because one happens, the other one is a little rough, right? Protect yourself, Jay. That is like the core of successful day traders is understanding losses and accepting them and not letting them grow because they're not doing things. So I would encourage you, I won't tell you you have to because I can't tell you what to do, right? But if you get into a position, let's say I go long here. Whoops, sorry. Let me get rid of my ATM strategy. If I get into a position with absolutely no strategy in place, if I buy the market, the opposite of a buy is a sell, right? So a sell takes me out of the market. So I need to right click below the current price, sell stop to. Now I have a protective stop. And if I need a target, again, if I bought, a sell will take me out of the market, sell limit to creates a target. And now I can adjust these either direction. I can move them. And of course, I don't have rules met for a trade here, but that's how you do it. But if, let's say, for example, my stop gets hit, I have to cancel out the other side. That's how you do it if for some reason you forget to put one in. I personally like to protect myself every time I get into a trade, though, because I'm in this to make money, not to hope I make money. So, guys, let's go to the top. Let's start talking about what you guys have posted. Let's relate it back to the rules. Everything goes back to the advantages, right? Whether it's a high probability trend trade or not, we're going to go back to the advantages. And one of my favorite pictures, guys, that you could ever take is when your rules aren't met. When you realize that you don't have the best of the best and you take a picture saying, there's nothing for me to do yet. And Gary, not a clear path to 93 because there's a fib in between and there's also a 50-50 right on a pivot stop out. So not a clear path. I always encourage you guys, make sure that you're looking at the whole picture when you annotate, that you're not trying to talk yourself into something. There's your termination condition. There's your termination condition. You say wait for a breakout. I like it. Strong reads. There's your termination condition. I guess it wasn't a clear path to 39, huh? See how that works? That's a pretty good one, right? Where is that picture? Clear path to 92.39. And it stopped dead at 92.36. Always look for the next line. Always look for the next line. Great pictures, Gary. Good job recognizing your rules not being met and then committing to not taking trades when they weren't met. That's the hardest part. And you absolutely crushed it. Nice job. Scrolling back up to the top. Let's find our next trade, guys. Let's see who posted next. Looks like Gene was in there. Accountability post. I love those. The hey, Mark, I know I broke my rules. Let's talk about it. First trade. Price had not reached the target yet. I'm going to respectfully disagree. Gene, are you with me in here? This is a great example of how being in the moment um, changes our perception a little bit about it. So for you newer users, price reached Fibonacci resistance to the tick and absolutely no trigger lines broke through. Does everybody see that here on crude oil? Price reached resistance to the absolute tick. And what that means to me is that there is no clear path. Even with odds favorable momentum, the path isn't clear. Guys, this is a huge lesson. We're going back to these basics, which means that this loser, through a basic understanding of termination conditions, this loser didn't have to happen, right? And if you didn't take this rules breaking loser, you wouldn't be convinced that you were so darn smart that you would begin to revenge trade. And I hope that that makes sense to you newer users. And this is one of the reasons why we embrace these advantages, especially as we're getting into things. Because if you avoid the rules broken trade, it becomes difficult to revenge trade because you never took the first one. Does that, I hope that that makes sense. I hope I'm saying that the way I wanted to. That's okay. So need for Rich, this little blue tab shows me where he entered over here, okay? And let me just erase some stuff. So the first thing that happened on this chart with the large chart is that we were in an uptrend. The next thing that we had was odds favorable momentum. Are you with me so far? Separation, small above the larger wide, absolutely beautiful. So when the first rule is met, the next thing I look for is, did price reach an area? This is how we define termination conditions. In this case, can you see how the market reached that Fibonacci resistance? That's a termination condition, which means that if you're following the rules, rule number 2 is never met, and you'll never take this entry because you don't have a clear path. But what you will do, and this is totally normal, is I want you to notice that Gene's arrow, when he talks about price hasn't reached, right there, that's not the bar that came back, is it? Right here, that's not the bar that retraced. His retracement comes from directly at the fib, directly at the termination condition. And this is how annotating your chart really creates an advantage, because I can see that you're thinking, oh man, I thought I got in at the previous bar where it didn't hit. And then it makes total sense to take this trade. But if I stop and I go back through, I can clearly see that price had already reached the fib, and there's your termination condition. Does that make sense, Rich? And then if you don't take the first trade because the rules are broken, you don't feel the need to revenge trade after. Great picture. I think Gene left, but that was a great picture. So we'll use his picture for lessons for everybody. And I'll thank him for it tomorrow. All right, let's see what the next trade is. We've got D-Rock. D-Rock's already left the room, but let's look at what he did. D-Rock had a good top, odds favorable momentum, nothing in the way, picture perfect entry. He locked in $100 profit and went break even. Absolutely picture perfect. And then here, the larger up and the smaller down. And I like this pick. I like the question that he put on there. Can this be odds favorable momentum even though the large triggers have not rolled over? What do you guys that have been with me a while think? Can it still be odds favorable momentum? I love the question, guys. This is when you're like, man, I think I had it, but I'm not sure. When I talk about odds favorable momentum, the only way to have it is when both triggers are wide angled in the direction of the trend. Give me a Y in the room if you're with me on this, because D-Rock just gave us the best lesson ever. They both have to be wide angled in the direction of the trend. And when they don't agree, that's that indecision. Absolutely, Rich. Nice job. But this is one of those things, as you're growing with the software, you're going to be like, wait a minute. I think it's odds favorable. The path is down. And you're going to find yourself not real sure. And guys, this is when you take that picture. And sure enough, without that momentum, notice that, and here's a great thing too. Do you notice how it's not favorable large triggers? The synthetics are up, but the large are down. So if we're talking about favorable large triggers, rule number 3, don't they both have to be wide and angled in the direction of the trend? Once again, this is the only way that I can ever have odds favorable momentum on a large chart, is that's what's going to create favorable large triggers. So when these are flat and against the trend, look at the synthetics over here. They're also up. It's a total safeguard. Great picture, great annotations. And we can look at it and say, you know what? There was indecision in the market and you fell victim to it. You guys posting in the room is what gets you where you want to be, guys. Simulator is great. Feedback on what you simulate is what's going to eliminate these little mistakes and keep you focused on the best of the best. So D-Rock's not here right now, but when we talk about that picture later, it's a great lesson for him. Gary, termination creates a full reversal. Full reversal gives odds favorable. You take the pullback to resistance inside of favorable large triggers. You get paid on the first contract and go break even on the second. Gary, beautiful execution on a 50-50 trade. Super sharp trading. Nice job. And then Gene, odds favorable. Everything says down. It's a 50-50 because the large hadn't cleared the areas yet. You get in at the lowest point. A little lower than Gary. I like it. Stop keeps you safe. Money on the first contract. Break even +1 on the second. Absolutely perfect. Two different traders in two different time zones taking the exact same trade. That's repetition and trust, guys. Smalls are below the large, but the path isn't clear. Great entries create manageable trades, opportunities for profits, and then getting out before bad things happen on that medium probability trade. Super solid management for both of you. And then Ron says he's got a little coffee money. Everything says up. The momentum is strong. Ron's taken the idea of momentum and a clear path and created entries that work for him. And 120 per contract on a 2 lot is a lot of coffee, Ron. Beautiful trade. It's just momentum and a clear path, and then Ron looks for a reason to get in and get out. Quick hits. When the large triggers reverse colors, it's usually pretty nice trades. That's okay. I like it when you think out loud. Let's look. They turned green right here, Rich. Didn't they? They also turned green right here. They turned green right here into a termination. Oh, here they flattened out, did nothing. I don't disagree that the trigger's turning may be the precursor for really nice trades. But they turned red right here. And I'm just scrolling back. I'm trying to look for instances where the color change, yeah, where the color change shouldn't lead the way. Now, when we go the other direction, odds favorable momentum pushes the market down. Odds favorable momentum pushes the market up. Odds favorable pushes down. Odds favorable pushes down. Odds favorable up. I love that you're observing, because what you're doing already is you're saying, hey, let me see if I can do some chart reading, right? Let me see if I can read my indicators. And look at how that momentum got it screaming to the downside. But this turn took us just right to the termination condition. So it's a great observation. And if you let that be the first thing that you look for, those triggers head in the right direction, then it's always going to keep you looking for that odds favorable momentum. Great observation, Rich. Thank you for sharing that. And then I forgot who this was. This was... I got lost. Sorry, guys, I get lost sometimes. Was this GWC? It was GWC. Let's see what we have. All chart strong triggers got out with the small profit. Where's your entry? Ah, I see it. All right, GWC, are you with me in here? Support held, right? Midband held, I believe is what you said. But do you notice how when you enter this trade, you're directly into a divergence high that absolutely none of the trigger lines have broken through? So you are trading into a termination condition. You're kind of in that indecision point. Okay, but do you see it? I'm not saying you're doing this, but usually when people say okay to me, it just means, Mark, stop talking. I don't want to hear it. But look at the perfect entry, and this is the second half of it. So I'm obligated because it's an educational room to point out that you traded into a termination conditions. But I'm equally as obligated because I'm a chart reader to say that your smalls are strong, your large are turning, every chart is rolling up, and you take a beautiful entry that allows you to manage out for a small profit. So there's two parts to this. There's the rules not met, but there's the beautiful execution through chart reading. And then new users will ask themselves, is that 1.25 ticks worth the headache of trading into a termination condition, especially with two divergences against it? I think it's a great picture with great execution. On the large chart, and you know that I have a picture for this, right? I love that you asked that question. Give me a second, Rich, and what we'll do is we'll go back and we'll see if the rules were met. So let's talk about divergence highs real quick, guys. When your Fibonacci areas, blue support, red resistance, when these are created, they're created through areas, right? Tick above, tick below. It's still a very real opportunity. Yellow one-to-ones are precise, 100%. They're 100% measurement. But these divergence highs and lows, and these are the two most forgotten areas in a reversal. So anytime the market has a divergence lower high, it represents a specific, a 100% to the tick area where not only could the in control force, buyers or sellers, not push any further, but they also lost momentum there. So these lines, these divergence highs and lows, they're like a line in the sand. And often they're going to try and get back and exceed it. That's what creates that pivot stop out. And this is why it's in the termination condition category, because it's a very key price where failure has already happened. So when you get back to it right here, GWC, the buyers tried as hard as they could and the sellers told them to go to hell, right? And pushed back. So the buyers are like, but we really want to go up. So when they get to this line in the sand, the sellers have already said we're making a stand here, right? And that's why we respect them as termination conditions. Does that make sense? It's literally a line in the sand. Awesome. Great picture. And great management. Way to take small profits on a medium probability trade. And guys, remember, just because I point out what may be the challenge in the trade, I'm always going to celebrate victories anytime I can, guys, because I think that victories create confidence. So it's important to me that you see the good and the challenges in every trade. All right, scrolling through. Ace J. And again, I think you came back and edited it, right? I'm guessing a short right here at the pullback, right at the triggers rolling. And sure enough, it goes down. We'll see if we can find your edited one in that one. And then on the ES, so Rich, between the point where odds favorable momentum began and the point where odds favorable momentum ended, right? Downtrend, odds favorable. Do you notice how we never got a pullback? Never got a pullback on that smaller, faster chart. So from a high probability trend trade standpoint, there wasn't an entry opportunity. But let me show you the next part of that is when this termination condition gives me this huge reaction and all of my triggers roll. Rich, you're going to get to a point with your chart reading where you probably take this trade right here to get down to this fib. It doesn't fit the rules for a high probability trend trade because the large triggers are still up over here. I don't have the momentum, and I really don't even have a clear path. But coming from the termination condition in a bad bottom, there's a lot of people that look for this trade right here for continuation. So know that that one's in the mix, right? It's in the future. But from a high probability trend trade standpoint, it just never gave us an entry. And one of the hardest things that we all do is just say, man, it wasn't my money. It didn't set up, so it wasn't my money. It didn't fit my rules, so I didn't take the trade. And since I didn't take the trade, I didn't win or lose. It just wasn't mine. Great question on that, though. All right, Chris L. Odds favorable momentum. Everything is down. You kind of jump in on a little pullback and you get out right before the trouble spot. Great use of momentum. And then this one is a little more wonky. You let it get above. Chris L., are you with me? I know you're looking for a different style trade here. So a continuation needs a solid termination. We missed the one-to-ones, but it's heading up. And the only thing I want to point out here, Chris, is actually maybe a couple things. If this pullback came to resistance inside of favorable large triggers, was your stop all the way up here where the market shouldn't go? How much were you willing to risk on these 10 contracts? Because the momentum is amazing, right? But we're still 50-50 on a couple areas. That's a pretty likely scenario. So I'm not saying don't take the trade. You didn't have a stop. That's terrifying to me. Where were you going to exit? At what point would you have exited? No worries. Guys, stops and targets are so important. So Chris, this look right here, this may have traded all the way up to resistance inside of favorable large triggers. Because it's 50-50 on a couple areas, it may have had the potential to shoot all the way up to Fibonacci resistance. And I'm not saying don't take the trade, but what I'm saying, uh-oh, they just booted me out of Discord. Give me 1 second, guys. You can probably still hear me. I know that you can't see me, so I'm getting back to it right now. Almost there. Sometimes Discord does that. Can you guys hear me? Can you see me? We back in? Okay. So Chris, you had a ton of momentum, right? And you're taking quick profits. I don't disagree with it at all. But know where enough is enough, right? Know where enough is enough. Know where you don't want to be in that trade anymore. And so the same thing is here, right? Is this odds favorable momentum going to the downside? You didn't touch the one-to-ones. You came close, but you didn't get there. And you took a long trade just above the window of opportunity for a potential short. So do you see how you're fighting momentum, you're fighting trend, everything says down, and you chose to go long? A more conservative. At least let the small triggers get above the large triggers, right? At least give it a fighting chance. And at this point, the same question you have to ask yourself, how far are you willing to let this run against you before you jump ship, right? And this is not based on a gap at all, really. Your gap theory says that if price accelerates a full bar away on the large chart, it may close. All you have here is a downtrend with odds favorable momentum and every indicator on every chart saying go down when you went long, which means that you got lucky, which is okay. I'll take lucky every now and then. But do you see how you fought every indicator on every chart for that long trade? That is rarely a long-term plan of success. Just throwing that out there. And again, you guys are going to take the trades that you take, right? You're going to take the trades that you're comfortable with. So Chris L., if you're going to keep fighting everything, make sure that your entries are solid. Make sure that you have a bulletproof approach to taking those trades. Let me see who's next. PFI, you snuck one in there on me right in between all of my pictures. You went long into a termination condition and it didn't work out. It's a great bottom. PFI, are you in the room? No worries, Chris. Don't tell me. Write it down in a plan and write your rules on the chart so I can at least hold you accountable to your rules on the chart. Does that make sense? Because if I just look at your chart, I say, man, that's financial suicide. Fighting that strength, fighting that direction, and going long where it looks like a short per the super high probability rules, I, I just say that's tough. But I also tell you, over here where the smalls break above, and then you get a little stab back after a second higher divergence, that's going to increase your chances exponentially. All right. So PFI, you may just be marking up one chart. You're welcome, Chris. I got you, dude. We're going to do this all day long. Eventually, I'm going to have your plan ingrained in my brain. Ron used to give me heartburn every day watching him do what he did until I understood what he was doing. So PFI, let's do a little large chart read. What do you say? Your good bottom came from the large chart, right? Why bother annotating it on the small chart? That is a termination, 100% no triggers through. And we're just going to go through definitions here. This is a strong bottom. Me personally, PFI, I don't have anything that's called an okay bottom. So you may, right? But from a large chart look, this is a strong bottom. This is a beautiful, beautiful, beautiful area that stopped the market and created a reversal. Right here, I have price that reached areas and none of the triggers have broken through. So it's not a good top when you take a long because it hasn't created a reversal in the market. So it's not that you ignored a good top. What you ignored is a termination condition on the large chart. Does that make sense? It's not a good top yet. It's not a good top until no, there is no but. But is what people that want to break the rules say. But tell me your but anyway. What the hell is a new trend? So PFI, this is where you start to make things up, right? What are your rules for a high probability trend trade? Show me in your rules where it says new trend. I've seen your trading PFI. You need an uptrend, right? You need odds favorable momentum. And you've told me in the past that you need a clear path, right? So this was a termination. This was a good top, right? I love it. And this is we're just walking through it. I did this with my brother as well. Do we expect the trend to continue in determination conditions? I think that's the question that you need to ask yourself. Because this was a strong top with odds favorable momentum. Did you take a short into the termination condition? Okay. This was a termination that created a full reversal. Did you take a long into the termination condition? Are we starting to see a pattern? I want you to change the word expecting to hoping. You were hoping they would break, right? That's okay. It's okay. I've hoped areas break as well. But PFI, do you see how rule number 2 keeps you out of this loser? It keeps you out of this loser. Rule number 1 keeps you out of a potential loser here. Rule number 2 keeps you out of a loser here. And rule number 2 keeps you out of a loser here. This awesome all the way to the termination condition. This strong bottom is awesome right up to the termination condition. This good top is awesome right up to the termination condition. So it's only one piece of the puzzle, recognizing the strong top or bottom. I think this is probably one of the most amazing pictures that could have been posted, right? Because rule number 2 saves bacon 4 times. And rather than expecting areas to break, what we can really do is we can wait for areas to break and wait for that advantage of a clear path. Does that make sense, PFI? Does that make sense, everybody? I like your thinking. You're looking for trend trades after a strong top or bottom. That is solid thinking. But the termination conditions are stealing your money. And I know this because you know what my biggest problem was when I started trading PFI? I traded in determination conditions like somebody, oh, don't waste the energy being pissed. If someone comes to your house and kicks your dog, get pissed. If you make a mistake, learn from it and grow. Because a pissed off brain doesn't analyze, it only looks for revenge. You're doing great. Do you know why you're doing great? Because you're identifying these beautiful tops and bottoms. Don't ever kick my dog, right? That's a great part of it. But now we're going to start respecting termination conditions, and you're going to let your amazing chart reading. But this isn't a momentum trade at all, is it? I bet you Safia went short about right here. No, this wasn't. This was a trend trade. That's all it is. It's a trend trade. That's okay. Let him yell. It's easy on my old eyes. It's okay. Termination. But it's not a momentum trade. A momentum trade happens with momentum, right? So PFI, if your small triggers are against you strong, me too. It can't be momentum. Does that make sense? If your small triggers are cranking against you, the momentum isn't there. Momentum trades require momentum on both charts, right? It's not even 50-50, Safia. It is dead set into two termination conditions, two levels of termination conditions. It's just, guys, the market got stuck in a range. Rule number 2 could have kept you safe. You can either accept that or not accept it. I'm cool with either. But my job is to explain how all of your losers and determination conditions could have been avoided with rule number 2. Rule number 2 keeps you out of those. No matter what your rules say, my rule number 2 keeps you out of them. I love it. Because we've got to put it all together. What are you debating, PFI? That you somehow got robbed by breaking a rule multiple times? That's on you. I hate strawberry ice cream, but I don't get pissy about it. I just avoid it. I hate termination conditions, so I avoid them. You didn't miss anything. You found the loser into the termination condition. You found the loser into the termination condition, right? That's what you found. You missed nothing. You found it. You took it. It just wasn't right. It didn't have advantages. Does that make sense? So don't tell yourself that you missed the money. What you did is you found the losers. So now we just figure out how do we not find the losers? By waiting for the clear path. And PFI, that appears to be your reoccurring challenge. And I recognize it with eagle-like vision because this right here, the termination condition section, PFI, this was dubbed the Mark Novak section. I traded into every termination condition I could find with odds favorable momentum because I hoped that they would break. And my brother, after I posted enough pictures in the room of me trading into termination conditions, he texted me privately. And he said, how many times are you going to trade into fibs that aren't going to break? How many times are you going to give away money into these areas? And you know what I did? And I shared this story with Safia. Is every time I took a picture, PFI, the first thing that I looked for was termination conditions. I said to hell with momentum. I said to hell with trend. And I looked for termination conditions because I knew that that was my biggest problem. And then once I made sure that there wasn't a termination condition, then I looked for momentum. True story. Safi and I had this talk a month and a half ago where I shared that with her. Because we all break a rule. We all do something that takes away our advantage. And that's okay. You have to every now and then so you can learn to respect the advantages. So you're great, dude. You're on a great path. You're posting and you're asking. The biggest thing that you have to do is you have to accept the coaching. That's the hardest part for those of us with egos. All right, who is this? This was Ace J, right? We're at the tail end of momentum. I like it, but it's 50-50 without odds favorable momentum. So we know that there's a little challenge. Hey, PFI, take care. We know there's a little challenge here, right? The area hasn't broken. Ace J, I'm gonna let you in on a secret. This fib turning red means absolutely nothing about whether or not the area is broken. And I just say that because, whoops, wrong picture. Because this fib turned blue and it never actually broke, right? But if it turns blue and the small and the large get through, then resistance is broken. And I got caught on this one a lot as well. When the triggers break, the area is broken. Right now, it definitely has the potential. And you were looking for the entry, and your entry needs to be down here at the lowest point of resistance, right? Does that make sense, SJ? Because down here you have weak triggers, but you do have a clear path and you do have an entry area. You've got 2 out of 3 to take a shot at a medium probability scenario. This one never made the area, really. It's a great picture, but I think the best lesson there is that don't get caught up in the fib line color, get caught up in the trigger position. And let me show you guys why. And let me do it this way. I'm going to draw a line over this red fib. And we're going to make it something ridiculous that doesn't line up with anything on our charts. Let's make it violet. All right. So guys, this was a great lesson. I had someone do this for me. Let me take a picture of the picture. And I hope this is helpful. This really was helpful for me because I really did the same thing, Ace J. You guys are going to hear me say that a lot because I think I've made every mistake you guys will ever make. So if price is running up to this pink line, right? Is this pink line resistance or is this pink line support? It's behaving as resistance. And it doesn't matter what color it is, right? They're blue and red just because that's what they happen to be. And then the next thing is if none of my trigger lines get above this pink line, I know that it's a termination condition. I know that it might stop the market. So it doesn't matter what color it is, right? It only matters that price reached it and the triggers didn't break it. And I like that lesson because what it does for you is it keeps you from getting hung up on the idea that this area of support has the small triggers through and the large triggers through. The market's trying to figure out whether or not it's going to break or hold right now. The color has nothing to do with it. Price is above it, the smalls are above it, the large are below it. It has the potential to break, no matter what color that fib is. So one less thing to think about, right? Just trigger line position. And I like your idea to go with the clear path and everything. Just let's go to the areas that are closer to the large triggers. It creates an advantage. Great pictures, Jay. Thank you for those. It's a good lesson. Let trigger line position dictate rather than the color of the fib. And then let's see where we're at. Man, you guys are keeping me busy. I like it. A lot of great lessons in these. All right, Ace J, we saw that one. Chris L, we saw that one. GWC. Everything says up from a good bottom, right? We're trading into the termination. But because of the strong bottom, GWC, you say this momentum from a termination, I'm willing to take a shot and manage aggressively. And I think, guys, this is a beautiful example of trading into a termination condition working. But on that same token, the exact same look into this termination condition doesn't work. So as long as you know what you're getting into, it makes it easier. And then termination to the tick didn't work out, right? Termination again didn't work out so much. Jumping in into the termination didn't work out so much. And then the pullback to the termination condition, into the termination again, you managed out of the problem. So range-bound markets, guys, range-bound markets. That long gets its butt kicked, right? That short gets its butt kicked. Every now and then you get lucky, teaching you to break your rules. I don't know about you guys. I've got a relatively full head of hair. I'm trying to keep it that way. Trading in determination conditions leaves a pile of hair on my desk. Trading on the way to the termination condition instead of into the termination condition with all that momentum. Totally different, right? Keeps going. All right, Paul. Waiting for that pullback that we were all waiting for. And everybody lost that one. Lex, you got in at the pullback to resistance up here. Off the good top, it looks like. I don't see stops or targets anywhere, which means that you're still risking all that money as momentum's waning. Stops and targets, Lex. Good look, though. Every chart said down, and you went down. I sure do like that. And then, Dano, you said you missed this one. What rules did you miss? What rules were met that you missed? I'm just asking because there's none on the chart. I see that, but what were you trading? Do me a favor, Lex. This section right here talks about those stops and targets. It'll help you. So, guys, when you don't tell me what you're doing, I am absolutely forced to go through and write my rules. My rules, I like it. Odds favorable momentum for sure, right? Price reached Fibonacci support and none of the trigger lines broke through. I see it because it's right here. So there was a termination condition that came into play. Do you see it, Dano? So trading directly into a termination condition with a window of opportunity that is that big. I like that you were looking for the bottom. I don't think you missed anything. Um, I think that if you were willing to take a shot at it, man, you had it at the right spot, right? If you were willing to take that shot, you definitely had it nailed. You had it dead to rights. It just didn't happen. And then, of course, that's right here is where I would just say, whoop, it's done, it's over, who cares? Let's get that limit down to the area of resistance inside of favorable large triggers because of this look. So I don't know. I think we sure are watching a lot of termination conditions hold today. I think that one broke because it didn't fill you. So you may have helped somebody else out. Nice job, guys. Gary, waiting for the same short everyone was waiting for and getting the same result everyone else got. Two divergences does not kill a high probability trend trade. It just didn't work. And then there was no reason to take a trade up here, right? Nothing saying that it was going to go down more. And then Dwight, let's see what you did. Would this divergence stop momentum on the 13-2? Which divergence are we talking about? One divergence down at the bottom, Dwight? So one divergence on a small chart, I'm going to have to say no. And I'm going to defer back to the rules. When I talk about the only termination condition that I give any credence on the small chart, Dwight, this is it. No matter what happens after two divergences, even if a trade dies from one divergence, the only termination condition that I'm respecting on the smaller chart is three in the same place. So until I get three in the same place, I'm always putting my trust and faith in odds favorable momentum on the large chart. Does that make sense? Takes all the pressure off of me. Great question, man. Great question. You guys are doing amazing today. Keeping me busy. I sure do appreciate that. And then Paul, 50-50 from a good bottom. Perfect entry, money all the way up. Nice job, Paul. Great looking trade. Lex, large chart says up. Large chart has momentum up. And you went long. I'm assuming you went long because it's 3 ticks above your price. So far away from those large triggers, so far away from areas inside of favorable large triggers. Rule number 3 helps a lot, man. Especially when those large triggers are a full bar away, it's very likely that it's going to pull back and close that gap. Everything says down and the market goes down. Sure does make it easy. PFI is not here. We won't get too far into his. Safia says with all that momentum and nothing in the way, she's going to get paid. It's very much a momentum style trade here, right? She didn't take the trend trade. When she didn't, she said, whoa, everything looks good. Everything says down. I'm going to take a little stab back and I'm going to get paid. Safia, beautiful trade. Very nice job. And then Snorri, strong top. Divergence helps it. But we're trading directly into a termination condition. Probably sitting on your hands waiting to see if it holds. Ron C, same thing. Strong top. Ron catches the momentum move between the top and the termination condition. Ron, perfect, consistent execution, doing the same thing every time because it's been proven to win more than it loses. It's a signal for when your rules are met, Safia. If you go through the section, Safia, this will describe what every indication means. But if the rules aren't met, it doesn't mean anything. It's just one more marking on the chart, right? If the rules aren't met, Safia, do you need it? Can I ask you that? When you have such a kick-ass plan that doesn't revolve around this, alleviate yourself of that burden. Just spend time studying it, watching videos. That's it. Do you know what I use the market flow chart for, Safia? Nothing. Don't even use it. Don't even have one. Nothing. I don't use it. Because I use odds favorable momentum and no termination conditions and pullbacks to resistance inside of triggers. Who was this? What a great looking trade. I clicked on it and I don't even know whose it is. This was Paul. Nice job, Paul. Odds favorable, clear path, perfect entry. Beautiful. Where's your stop? Stop's a little high. Nice job. Ace J. Let's see what you got, bud. Odds favorable. Everything says down. You take the first pullback and you get paid. And you get paid again. And then you jump in. You said, up, you know what? They owe me more money. And then that third divergence prints. And I don't see stops anywhere. So Ace J, if you're just going to sell the pullback, right? But do you notice how it's a pullback to resistance at a 50-50 on a divergence low with 1, 2, 3 divergences having printed? Losing a lot of your mojo as it pulls back there. A lot of indications saying that the market may be changing direction even if it's momentarily. Might push you beyond that area. Guys, embrace stops and targets. I'm seeing a lot of you trading without them. Terrifying. GWC. Great bottom creates odds favorable. And this is that same thing, right? Making a decision to trade into an area with the potential to break because of the good bottom. And then GWC, I hope you're with me in this one because this is a great lesson for everybody. If I'm going to take a shot at trading into a termination condition, if I'm going to take a shot at this area breaking because I have a strong bottom, Odds favorable momentum. GWC, I don't know if you knew this in the moment. Look at the setup on the smaller, faster chart. It's at the perfect location. It has zero divergence and it has the strongest triggers you could ever hope for. If I'm going to trade into a termination condition, GWC, you just gave me the absolute best picture of how to take that shot. Does that make sense? Because when a strong bottom creates a full reversal with the best possible looking triggers, and my small chart doesn't even flinch, it still might hold, but you've got an awful lot of advantages, and your entry is so outstanding that your risk is minimal taking that shot. And then there's the gap theory. Snorri perfect. Price reaches the midband, even from a termination condition. Large triggers are a full bar away, which means that price is likely to close the gap to the large triggers. And sure enough, it did. Snorri, did it keep you out of a long trade up here? Did it work that patience piece for you a little bit? It looks like it did, huh? Isn't that outstanding? Guys, the money you make is awesome. Every time you win a trade, it's amazing. The money you don't give away from breaking rules is what creates a successful day. Has anyone ever had that? Has anyone ever taken 4 winners and made $1,200, right? And you're like, oh, I'm the smartest man ever. I'm so good at this. I'm invincible. Look at this giant S on my chest. And then you take 6 rules breakers and you lose $1,800 and you're down $600 on the way and you're sad and you're angry and you revenge trade and you're like, how did I go from doing so great to getting the ever-loving crap kicked out of me? It's typically when you start breaking your rules. Yeah, been there. Guys, we've all been there. It's when you start breaking your rules that you start noticing more and more losers, guys. It's when you start breaking your rules that you start chipping away from those wins. You start chipping away from all of those great trades because you're giving back those profits with the ones that don't fit the rules, right? So the idea is that you commit to a plan that gives you the best chance of success, that you commit to a plan that's full of advantages. And I'm telling you right now that a bad bottom directly into a termination condition is a horrible recipe for a long right here. And a bad bottom into a termination condition after 3 divergences is a horrible recipe for a long from down here. Snorri, what's one of the potential outcomes when a bad bottom makes it to the midband and the gap theory is in place? Unfinished business, right? It doesn't mean that there's a short trade, but it means that a lot of the times the market loves to go down and finish the move to the fib that it couldn't get to. Because remember, fibs are where people react, guys. I'm not going short with odds favorable momentum. I'm not going short into the uptrend, but I'm also not going long against all these divergences and these split ugly triggers and everything down. So if I can't go long and I can't go short, what do you suppose my best course of action is right now? If my rules aren't met for a long, watch a video, make a sandwich, text your wife or your husband, right? Stand up and walk away from the computer and say, you know what, when I come back, maybe my rules will be met. So I don't know what's going to happen in the market, guys. I never know what's going to happen in the market. I don't know if it's going to go up or down from here. But what I do know is that my rules aren't met. And then if I go to crude oil, I know that I reached resistance, and there's that darn gap theory again. And resistance came all the way back to support, but I'm kind of stuck. I just don't know what's going to happen. But over here, I've got a great top that creates odds favorable momentum. That odds favorable momentum is almost giving me a clear path. Well, there it is. There's my clear path. So if the market's nice enough to give me a reversal, all I have to do is find an area inside of favorable large triggers. Lex, that's it. Ron, I hope you find some cool stuff. I will see you in the morning. And Lex, that's the hardest thing to do, man, is absolutely nothing when there's nothing to do. Um, One of the other hard things to do for new users is to sit on the sidelines, right? And to watch. Let me find one that's a little unorthodox. And to watch somebody take a trade that breaks those rules that you're learning. To find somebody take a trade that doesn't fit your plan. To see somebody find success in a trade that you told yourself you weren't allowed to enter. Guys, this is going to frustrate the ever-loving crap out of you. And the reality is it's just not your trade, right? And people love to post pictures in the room. Mark, what would you do? I would follow my rules, right? But what I do has nothing to do with what you would do. And people used to ask John Novak, will you just trade live for the class so that I can learn to be a trader? Watching somebody trade won't make you a great trader. Having a solid set of rules that's been proven to win more than it loses, guys, that's what gets you where you want to be. And there it is. And if you resolve yourself to the position that it's either rules met or rules not met, and those are your only options, um, then that's it. That's all it is. It takes the burden of guesswork off of you. It's the best hammer you could ever buy, Lex Luthor. Now you just have to learn to swing it, right? That's all it is. Now you just have to learn to swing it. NASDAQ sure railed down. Oh, look at that. The termination condition worked. Did anybody go long right here? I hope not. Snorri called it, didn't he? Snorri, I used to think John Novak was absolutely magical when he would say, with this look, the market's likely to come back and retest to do something else. What I didn't realize that he was just chart reading. Guys, we have about 10 minutes. What do you want to talk about? Is there something that you'd like a little clarity on? Okay, let's talk about Safia. She raised her hand. Oh no, let's talk about her trade. You did. Let's see. So Safia, you had a termination that created a full reversal. The full reversal gave you the best momentum look that you could ever possibly hope for. And you know that if price breaks support and pulls back to it, that's your shot, right? You didn't like the entry down here? Uh, I think for your style trading, it was good. Safia, wasn't this your entry right where my cursor is, though? I feel it was late for yours. From a good top with all this momentum, watch this, Safia. Let me show you how you weren't early. You were late. Your rules say break the area in question, and if the momentum is absolutely screaming, sell the pullback to the area. I've seen you take this entry 1,000 times. Right? So historically, that's the Safia entry. I love it. And since you missed it, you said, well, everything's still probably going to go. Everything's cranking down. It's beautiful. It's a strong top. I'll get in down here. And then, Safia, the part of the equation that most people don't understand is you probably had a stop up here where the market shouldn't go. Is that fair? 20 ticks where the market shouldn't go. Which means that even if the market pulled back to Fibonacci resistance, whoops, wrong one. Even if the market pulls back to Fibonacci resistance inside of favorable large triggers, which is the perfect recipe, your stop kept you safe. And then when it starts going and doing what it's supposed to do, you were able to reduce risk even further. All right. And then are you ready? I've got to get you on one more thing, Safia. Entry inside of large what? Because there's your entry. What does this mean? Don't be sorry. This is just fun for me at this point, Safia, because you have a plan that you've tested, that you simulated, that you've written rules for, that you have reproduced over and over and over to make sure that it gives you a statistical advantage. And this is a plan that is yielding outstanding results for you, right? So when you fudge your rules a little bit with the ability, because of your ability to read charts, own it, Safia. It's yours. You did all the hard work. All I did was annoy the hell out of you for 6 months. So when you don't catch your perfect trade, you still know that the conditions haven't changed, and you're just getting to the point to where you find alternate entries that maybe aren't your best entries. And you hit your goal again today, you said? You seem to do that a lot lately. Great work. Do you guys remember that line that we drew earlier? Where the market was likely to go when a bad bottom goes to a mid-band that acts as a termination condition? That's it. Patience is the big deal. Snorri, do you remember when you called this one? Now you have to make a decision. Is a couple ticks off of it okay? Or are you still looking for an entry inside of favorable large triggers? And that's only a decision you can make. It's a 50-50. There's no divergence. There's strong triggers. There's only one line inside of favorable large triggers. There you go, GWC. There's that keep it simple trading plan. I'm telling you guys, it doesn't have to be difficult. It doesn't have to be stressful. It just takes a little while. It takes a little while to get your comfort zone and then to repeat it every day. And that's it. Safia, great short, by the way. Nice job. But Safia's trade's not my trade. True story, guys. I teach the class. I can read indicators with the best of them. I don't take Safia's trades. They just don't feel right to me. It doesn't mean that they're not right. It just means that my brain doesn't click. It doesn't click. It doesn't recognize them in the moment. And I tend to be late or I tend to make mistakes. So I don't take that trade. If you guys want to know what my plan looks like, this is it. This is what I focus on every day. True story. There's a little adjustments on the 50-50, but that's it. There are no secrets with Nexgen, guys. We give you everything that you need to be successful. Do you want all the trades or do you want the best trades? That's a question that you have to ask for yourself. Do you want to go into trades not protecting your positions where the market shouldn't go? Or do you want to be able to cut ties, right? And take small losses if need be, and then wait for the next opportunity? That's a decision that only you can make. But if you hope that a blue line would hold, you lost. And if you hope that a cyan line would hold, you lost. And if you hope that that blue line here would hold, you lost. And if you hope that this red line would break, you lost. And you lost again. And you lost again into the blue line. Guys, rules are designed to keep you safe. Rules are designed to give you an advantage each and every time you get into the market. So if you're brand new Embrace the rules, right? Write them out, practice them, take the pictures, post them in the room, and we'll get there together every day. But that's it for me, guys. I have run out of breath. Great class, great questions, great pictures. I hope you learned something today. I hope you have a little more clarity going into different situations. Guys, embrace the idea that stops aren't an option. They can be for you, but it's silly. There's not a successful trader alive that would tell you to trade without stops. You're very welcome, Safia. And then I will be back tomorrow morning. We're going to do it again. We're going to talk about high probability trend trades again. We're going to